XRP OMG, did you just heard what the IMF said about XRP? Hello guys, welcome to our channel. Today in this video we are going to discuss what the IMF said about XRP and what is going on between them. But before we start the video, make sure to give this video a big thumbs up, and if you are new to the channel don't forget to subscribe before leaving. Also hit that bell icon so that you can get notified whenever we will upload a new video. For now, let's get back to the video straight away.
You want to win an iPhone 12, maybe a MacBook Pro. How about $500 cash? You decide. All you have to do is comment the secret hidden message somewhere in this video and leave a like on this video and subscribe to the channel so we can keep affording these giveaways.
So let's talk IMF and Ripple for a second. For about a year now, maybe two, we have seen the IMF alongside Ripple and images blasted all over the internet. We have seen the managing director and chairwoman of the International Monetary Fund praise Ripple and what Ripple is trying to accomplish with the digital asset XRP over and over again. But why? There has to be a purpose. Is the IMF going to create the IMF coin and are just using XRP as an example? Unlikely. So what is really going on between Ripple and the IMF? Let's dig in a little deeper. Couple months back at the Paris Fintech Festival, Christine Lagarde warned banks that they need to act and adapt to new technologies to better serve their customers. Christine Lagarde said, "I think in the banking system at large in many countries, the difference will not be between those who are disrupted and those who survive. The difference will be between those who are cannibalized because they're not seeing it coming, and they're not embracing it, and those who self-induce that cannibalization." And I'm using cannibalization on purpose because it's a bit of a striking, horrible word. But it's really what it means. You're going to disrupt your business model. You're going to change it. You're going to reduce your costs. You're going to expedite your transactions, and you're going to inspire confidence because you will build out on the basis of an existing backbone, which is your bank and the confidence relationship you've established with your customers. So what would have to happen for the IMF to get involved in digital assets? Well, it's simple actually. A country or central bank would have to hold a digital currency or issue a digital currency. We have read that the BOJ, Bank of Japan, Singapore, and Iran were all moving towards a digital currency. This would position the IMF to step in as well. This would force the IMF to find a way to support these countries and this new form of e-money. Once enough countries convert to CBDC, then XRP will become a reserve asset, and then the IMF will step in. The Bank of Japan, BOJ, has published a new report that looks into the concept of central bank digital currencies, CBDCs. The report, titled Digital Innovation, Data Revolution and Central Bank Digital Currency, states that CBDCs can be categorized into two types, one, used by general public in place of banknotes, and the other for large value settlements, which are based on central bank deposits and adopt new technologies such as distributed ledger technology, DLT. This paper will focus mainly on CBDC in the former, A, category, CBDCs used by the general public, and their relevant issues, unless otherwise noted, the report states. The first day of the conference saw Raghuram Rajan, the former governor of Federal Reserve Bank of India and chief economist for the International Monetary Fund. Rajan was asked about the possibility of XRP finding a place in a global reserve like the dollar, but he said that it was not something the XRP was trying to become. The chief economist said, "What you're asking for is, whether there is a possibility of a global currency, and to some extent that is what Libra was trying to do, and as I understand, that it is different from what XRP is trying to do." He explained the regulatory concerns of maintaining the value of a certain cryptocurrency or stablecoin. This will trigger the regulators to ensure the digital assets are being backed with financial assets in order to maintain the value, but this might, in turn, relate them to banks and not what they were trying to achieve. He added, "Once you get an army of regulators with every central bank looking at it, the other question is, have you added a whole set of transaction costs to it, and is it worth? Is it that useful?" According to Raghuram Rajan, XRP was not trying to maintain value but offer a vehicle for exchange. This would allow its value to fluctuate and will not impact the transactions that take 10 seconds to complete. As I understand it, what is attempted with XRP is not as much maintaining the value but offering a vehicle for exchange, which is quite different, because then you can have value fluctuating, only you need the value to be stable for 10 seconds, while the whole transaction takes place, and as a result there is no different need for regulations. You don't need to regulate value, I don't care. Rajan concluded by saying that such transactions with XRP do not worry the regulators about displacing fiat currencies, as the users are moving from one fiat to another while maintaining the value. Thus, XRP can be looked at as a means of exchange and not a store of value. In the report by Donghee, the deputy director of the Monetary and Capital Markets Department, it was noted that for regular fiat to stay relevant, central banks needed to tokenize their currencies to be in tune with the times. But is tokenization really necessary when we already have a coin with a payment solution on the blockchain already working? This coin is none other than Ripple, XRP, and its products of XVIA, XCurrent, XRapid, and RippleNet. So why would central banks use Ripple and its products rather than tokenizing regular fiat? Firstly, it is a known fact that Ripple has partnered with between 40 and 50 such central banks who are in turn part of the RippleNet network. This network is a decentralized global network of banks and payment providers using Ripple's distributed financial technology, which provides real-time messaging, clearing and settlement of financial transactions. In terms of integrating their already existing infrastructure to RippleNet, we have the API-based XVIA to simplify this for the banks in an instant. The same XVIA is being used by two recent members of the RippleNet network from Brazil and Singapore, giving them access to the additional markets of the United States, Southeast Asia, South America and Europe. Secondly, global central banks need a reserve currency to facilitate cross-border trade, investments, transactions, and debt payments. If they are already part of RippleNet, they can have a reserve of XRP to aid in transactions. The coin has a high circulation of 39.189 billion with another 55 billion XRP locked up in escrow. This latter amount can be purchased by central banks and held as reserves. When each central bank wants to do business with another, the transaction will be almost instant and secure due to XRP. Thirdly, times are changing, as Deputy Director at the IMF, Donghee, pointed out. Central banks need to be progressive in a manner similar to how the IMF is able to forecast the general change in direction in the global financial systems. Any country that will not adapt will find its currencies obsolete as its citizens gradually go digital. One needs only to look at the mobile apps we possess to know that we are heading to a peer-to-peer economy that bypasses all banks. In conclusion, the global central banks should take the report by Mr. He as a warning sign that they should accommodate current technology trends or risk being irrelevant. We cannot ignore Venezuela for leading in crypto adoption, albeit through what many economists stated as the last kicks of a dying horse. With respect to the latter, we shall leave it to history to decide if President Nicolas Maduro did the right thing. That's it for today, guys. We will see you next time. Until then, goodbye.